Welcome to this market and economic update. In this video, we're going to be discussing what drove markets in January, a month that saw both new record highs and periods of volatility. Despite headlines that covered tensions with Venezuela and Greenland, news about new Fed policy, new Fed chairs, stocks and bonds posted positive returns, while commodities pulled back from all-time highs. For long-term investors, not much changes. January serves as a valuable reminder that while headlines can move markets in unpredictable ways, fundamentals and long-term planning are what matter most. Despite the reasons for volatility that we're about to discuss, as you can see from this chart, generally, markets have held up quite well so far this year. At the beginning of the year, the US captured Nicolas Maduro, which quickly turned into a conversation around oil since Venezuela holds the largest proven oil reserves. Then concerns rose further over statements regarding the purchase of Greenland, which sparked fears over potential tariffs against NATO countries. Both geopolitical events luckily de-escalated quickly, allowing markets to recover fairly quickly. So while history shows that geopolitical events may drive short-term uncertainty, their effects on the markets and the economy are often overstated. Now let's turn to what happened with precious metals and the dollar. Gold and silver experienced dramatic moves in January. Gold rose to nearly $5,600, while silver topped $120 an ounce before both sold off on the final day of the month. Most of this is driven by what most would call the debasement trade, the idea that fiscal and monetary policies here in the US will weaken the dollar and strengthen precious metals. Fed uncertainty, especially whether the new Fed chair will push rates down, drove metals higher earlier in January. However, on January 30th, President Trump announced his intention to nominate Kevin Warsh as the next Fed chair once Jerome Powell's term ends here in mid-May. This shifted expectation to a smoother transition between Fed chairs, leading to a plunge in both metals. The reversal demonstrates how quickly markets can shift based on policy expectations. It underscores why precious metals should be part of a much broader portfolio. Finally, it's important to note that earnings have been strong. 75% of S&P 500 companies that reported Q4 earnings beat earnings expectations. If this continues, large public companies could see earnings growth of almost 12% for the quarter. Many investors are focusing on AI and tech since they have contributed significantly to market returns over the past several years. But at the same time, many other sectors have benefited from broad economic growth as well. And they've grown their earnings at faster rates as well. For long-term investors, the underlying message is generally positive. Corporate profitability remains strong across many sectors, supporting stock market valuations. This fundamental strength is one reason major indexes remain positive despite volatility in January. At the end of the day, I hope you found all of this useful and insightful. If there's any questions you have, feel free to call myself, anyone on the team. We're happy to talk anytime. Thank you so much.